There we go. What's
Boom.
happening? What's happening, fellow traders? What's happening, Mom?
Hey, good morning.
Good morning. Good evening from Bali,
Yeah.
8:32
How are you
p.m.
feeling today?
Any given moment, I could run to the toilet. So keep that image while we go over all these trades and this wonderful back testing.
Uh,
We can edit this part out from the recording later for YouTube. This is the preamble.
yeah. How fine. How frequent.
Yeah, definitely feeling better than earlier. Like I had a nurse come and give me an IV. That's a thing they do in Bali, apparently. For like
Mm,
75 bucks, she came and gave me all sorts of like a whole saline drip, vitamins, some kind of like Tylenol painkiller or something or other, D3, zinc, all sorts of stuff.
mm.
Oh, nice. We got some people here. Nice. Let's see if my screen share works here. How's that? Can everybody see that?
Yeah, I can see it. So I'm
Nice.
assuming everyone else can.
Nice. Okay, cool. So just bear with us here for a second, everybody. It's the first webinar we've done on so we're just gonna go through a couple things and make sure everything's working here. Where is the chat? Why did it disappear on me? Just because I shared my screen, it disappeared on me? That doesn't seem right. I guess we can just take, I don't know, we can either take questions during, which I don't mind actually, or we can take questions at the end. Why can't I see anybody? Oh, here we go.
Can you see the
There
chat
we
now?
go. There we go. Now I can see it.
Okay.
Okay. Hello. Does that work? I just posted a hello in there real quick. Nice. I see attendees for Travis. What's up, man? Good to see you. Jimmy and Sabrine. Are you new, Sabrine? Jimmy. Oh, I guess that's not Jimmy. That's Jummy.
Yeah,
Did you just
Jimmy.
sign up? Did
Yeah,
Jimmy just
yesterday.
sign up with us?
Yeah, yesterday.
Oh, sweet. Welcome. Okay, so we're just going to go through. I'm basically just going to present this webinar in like a similar way that I did for the Ninja Trader one, but this one I have a little bit more liberty to actually go through some backtesting stuff for everybody, and as much time as I want, technically speaking. I'm going to try to keep it at about an hour though, or until I just can't take it no mo. Um, let's see. Let me know what you guys think about. Show my video actually for a second. Look, there's me. Look, I'm a real person. I'm a legit real person. I'm not just some fake person selling software. I'm here in Bali, pushing through this meeting, even though I'm not feeling great, but I think we should get this thing recorded. I'm going to take a little sip of my coffee here and get started. Do a little pause so we can edit this later. Okay, I'm going to pause for like 10 seconds or something. What's up, everybody? Jake Royal from StratGeeks coming at you loud and clear, hopefully. And today we're going to be going through, I guess you could consider this ORS Fusion my life's work and Eamon's life work too, because he definitely had a part in designing aspects of the system, and he's the business guy. So without Eamon, none of you folks would be here. I probably wouldn't even be here. I don't know. So thank you. Thank you. Thank you. We've got a good team going here. So let me just, I'm going to minimize the chat over here. You guys can't see the chat on the screen, right?
Yes, we can.
When
It's
somebody give me, you can see the chat on the screen?
on the screen, not
Okay, I
on.
don't need to see it. Okay, hopefully it'll notify me. If you guys want to ask a question in the middle, that's fine. I'll kind of feel it out and see if I can get to the question in real time, or if we're just going to wait to the end or whatever.
Let me start by
So
something.
this will be beneficial.
I'm going to ask you something.
Yeah, go ahead.
You do like 30 seconds intro about your background in trading, and I'm going to do the same when you're done. So people
Oh, yeah, good idea.
know who you are and how got you involved. How did you get involved in the trading, and where are you at now?
That's great. That's a great idea. So let's do this. There's me, there's my dog. And yeah, my trading journey started about, I would say 8 years ago, something like that. I was running a painting business in San Diego, California with my brother. And I showed up to talk about some jobs that we had going on, and he had this candle chart on his ridiculously huge TV that he really loves, like ridiculously huge, probably like a 70-inch TV or something. So I walked in and I was like, whoa, what is that? That looks cool. Like I'd never really even looked at a bar chart, a candlestick chart ever. I've never really actually took more than 2 seconds to look at one. So I started asking him questions. I'm like, dude, when did you start doing this? He's like, oh, just a little bit ago. And I was like, oh, okay. Well, what is that? What do those boxes mean? I didn't even know what they were called, candles. He's like, oh, those are candles. And I didn't even know where the open and the open was, where the close was. I didn't know what a wick was. But as soon as he told me that that was the price movement, I don't know, he's probably looking at a 1 minute chart. But as soon as he told me that that was the price movement in 1 minute, and then I looked at the trend up and down or whatever, and I was like, I got to know more about this. And honestly, I was immediately addicted. And I realized later that I think I was in third, fourth, fifth grade. I remember walking through the hall of whatever school I was attending that at that point in, I think it was North Carolina or somewhere, or Pennsylvania, and I just had a thought pop into my head. I want to be a trader. I had no idea what a trader even was, but I never forgot that thought. If you have a dream when you're a kid, there's like a few dreams maybe that kind of stick. Like I had a couple flying dreams. I still remember those dreams to this day. And I remember that thought, someday I want to be a trader. And it kind of fell in my lap when I walked in my brother's house that day. 8 years later, here I am, working with Eamon on this wonderful strategy that we have here. Did a lot of manual trading for many years. It was never profitable. I didn't lose hundreds of thousands of dollars. Thank you. Thank you, God, for prop firms, because otherwise I definitely would have. Prop firms came around, for me, about 3 years ago or something. And ever since then, I've been just trying to get a payout, trying to get a payout, trying to get a payout. And I had never received a payout. Just never happened until ORS, until the automation. Obviously, I've worked on my psychology a lot, but yeah, here we are. That was a little more than 30 seconds, but pass it off to you, Eamon.
Thanks. Thanks, Jake. Again, I don't have a pretty picture like the one Jake has, but here, again, I'm a real person. I'm in the office, actually stuck in a cubicle. It's almost like a capsule, trying to avoid, interference with others around me. Started trading a bit longer than Jake, probably 15 years ago, and that was because I got these spammy emails about stock picks, and like, okay, these guys are making money. I mean, the recommendation came in, and like the guy made 100% on his recommendation. The guy, another guy, 150%, and so on. So I took this serious, and I'm a fan of education. So I went spent like $10,000 in education in a course that they teach here in Houston. It's a very famous actually institution. I think it's a pretty reputable one. It's called Online Trading Academy. Spent a couple of $5,000 on stocks and then $5,000 on forex. The money was gonna get paid back as a rebate when you do the trade, so like almost like a nothing. I'm not gonna lose anything. So I did that for about a year and a half, and then I started moving. I work in the oil and gas, by the way, 8 to 5. I started moving around the globe, and the time zones that we're in were not suitable for me to do trades. I was kind of profitable, but not very profitable. If I end the day with $15, I'm like, okay, this is a green day. But then the green days, I mean, break even. It's like, okay, is it really worth spending the time doing this? And then I said, okay, no, it's not worth it. So I gave up and then came back to the US 10 years ago. But then I started, okay, no. I was let go from my company, very well paying job in Houston, the oil and gas. So my income went from a couple of $100,000 to zero one day. So that was like an eye opener. I was like, holy crap. And with single source family. So my wife doesn't work. We don't have any other source of income in the family. And at the same time, I came across someone who was selling um, bot that trades gold. And the theory of the bot was they used dollar cost average. So it goes against you, you add the dollar cost average, it goes against the dollar cost average, and so on. It was doing fine. Well, there was some scary nights because it would go against you for 2 or 3 hours, and would feel like you're gonna get liquidated and basically lose all your cash. I didn't know about prop firms at the time, so it was all cash. Then we were doing fine for a couple of months. Then we decided to take a trip to Turkey. We went to Turkey for 10 days. And in Turkey, at this time, Russia invaded Ukraine. And the gold started moving up for almost 2 days straight. Never did any retracement to be able to close the trade. So I lost tens of thousands of dollars in almost a day. So that was a very painful experience. Yeah. So that was cash. So going back to and then bought another software where I got to meet Jake. We He was actually kind of like instructing some of the about the software. The software is a time-based signal. It doesn't really give signals. It gives time zones. Like, okay, sell here, buy here in this zone. It's most likely it's gonna go up here. Most likely gonna go down here. But it's not really worth the. I use this terminology. The software was $10,000. I could save myself $10,000 and just use a dime. So if I flip a dime, it was almost like 50-50 chance. So if I flip a dime, head is long,
Yeah.
tail is short. So anyways, I got to know Jake and we talked about automation, man, this is my dream and so on. Long story short, we've been talking and brainstorming and dreaming about what we want to do to automate our trades. And actually, we tried to automate the software that we had, but it didn't work. So we did all this, and we had another software, another bot that we were about to launch, but thing didn't work right, so we stopped that one. But until we landed on the opening range, was mainly Jake's idea with some injections from my side along the way. Um, Again, this is probably the only one that I have used for the last 6 months, almost a year. And I'm not going to share my financials, but uh, it's doing well. All I can say, it's doing well. So I'm going to cut it here, and just wanted to give you a flavor of who we are, I guess, and what we do, and how we got involved in this. One thing that I'm going to mention here, and you can ask some of our clients about this, and maybe some on the call here have the similar experience. We are in this business, yes, to make money, but it's almost run as a family business. So we have
Yeah.
had cases where people come and say, "Well, you know what? It's pretty tight. This is not an invitation for everyone here to go and ask for discounts, but we are trying to make the best impact we can on this community. Uh, Money is part of it, but being a part of this family, and I call it a family, is really what we are after.
Totally.
Maybe it will get to a point where actually the subscription is going to be a minor part of our income using the ORS. So it'd be like, is it really worth running the ORS business? Uh, Again, we are here to make positive impact, hopefully, on everyone. And I don't want anyone to lose any money trading if I can. People will lose money, but I wish. I mean, this is my dream: is that nobody loses money using our system. All right. With that, I'll shut up and hand it to Jake. Thank you, guys.
Thank you, Eamon. Thank you. Appreciate you, brother. Don't worry, everybody who's currently subscribed, you'll never lose. Like, we might stop taking new clients at some point down the next year, 2, 3, 10 years, who knows? But we're never going to just say, oh, we're pulling everybody's license. That's never going to happen. So don't worry about that. Okay, let me just get rid of my camera here. Thank you. That was pretty cool to hear that story again, Eamon. So what are we doing? We are trading this system called ORS, and we call it ORS Fusion, Opening Range System Fusion. Call it Fusion because it's just it's a fusion of a bunch of ideas. Let me just turn that mic up a little bit. There we go. Okay, so we already saw me and my dog. And so to me, without ORS Fusion, or really without looking at the opening range before I start trading, and then I'll show you what these levels look like in a second. Without it, I feel completely unprepared for the days trading ahead. Like the opening range for me and for everybody here at StratGeeks that's trading ORS Fusion, it's our weather vane. It's our weather forecast for the day. No question about it. Now, that doesn't mean that every day is going to be a winning day, but we have seen over time that the winning days are bigger than the losing days, and that the losing days are not catastrophic. And the winning days actually can be quite large. So, so the late great Jim Simons, hopefully you folks know who Jim Simons is. Look him up, Jim Simons. I think his fund, over the course of however many decades he had started his quant trading, he's like the father of quant trading. And I mean, it's up for argument, but I doubt it. That there would be anybody. $30.5 billion over decades that he made. So to me, just his company alone, he hired mathematicians and physicists and statisticians. Like I was watching an interview of him today, and he wouldn't hire somebody unless they had one of those credentials from a high-end university and also had written multiple papers that were published that he liked. So he found the best of the best. And the reason I mention all that is there's this thing out there that people call the efficient market hypothesis. I completely call BS on it. Just Jim Simons alone, let alone all the other traders out there that are actually making money. And he was a 100% quant trader. He had algorithms upon algorithms, trading. So let's go to the next slide. Yeah, so with ORS, or with just the opening range and the levels, how we break things up, it's like trying to go on a camping trip without checking the weather forecast first, not using it, and then using it. I mean, as everybody, as you sign up for ORS, you'll start to get the picture. I mean, at least I did. And if I was excuse me, I guess I am a little sick. Okay, hold on. Excuse me. You'll start to get kind of, I don't know, like addicted to knowing what the opening range number is. Is it 200 ticks today? Is it 400 ticks today? It's a way to gauge what the day is going to be like ahead, at least in some degree. So knowing that weather forecast, we decided to rent a cabin instead of our tents because we knew that there was a higher probability, and that's what it's all about. Probabilities, higher probabilities of it raining on this particular day than being sunny and warm. So I love this quote from Marcus here, this famous mathematician. My big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, and that's exactly what we do here, patterns emerge and you start to understand why things are the way they are. So about 4 years ago, it was right around COVID. I was up in my buddy's cabin, living up there for a month in Lake Tahoe, skiing every day and doing my trading thing. And then one day it just hit me like, well, what? I had bought this other program and these guys just disappeared. By the way, we don't disappear. Like I will, once you sign, this might sound a little salesy, but it's just the truth. Like once you sign up with us and you get your machine ID and everything, there is a video that you can set everything up all on your own, but I don't want to leave folks out to dry even just like that. Go ahead and set things up on your own, but then we have as included with the price is a meeting. Uh-oh. What just happened there? I hope I didn't just lose. Where's that? You guys still there? I am in Bali.
Yes.
Oh no, I think we're still in the meeting. Okay. It's not letting me present here, but you guys can probably get the idea here. So yeah, about 4 years ago, I just kind of had an epiphany. I'm like, opening range. Oh, because that's right. Sorry, I lost my train of thought. I had purchased this semi-automated trading system from these guys, and it was actually listed on the Apex website. So I was like, maybe these guys are legit, trustable. Like they're an affiliate with Apex. You can literally go to the Apex, whatever. They have that second website. apexinvesting something.com. And there it was. And I was like, I'll give it a shot. And it was like $2,000. And I had already spent $10,000 on a program before that. And I was like, I'm just going to give it a shot because what I'm doing is not working. And I was still using the $10,000 program, but it wasn't working. I mean, it was also my psychology, obviously, but yeah, I got that automated system, and it had an opening range breakout. And for some reason, I had never really thought that much about the opening range. And I started seeing, the breakouts and then the retraces. And then I was like, well, what if you just split it up into 4 sections and extrapolate the lines all the way up and all the way down? And then that's the support and resistance for the day. And I did it. I made a little Fibonacci tool. And within like 5-10 minutes of looking at charts, I was blown away on how much, at least what I saw, how much significance there were to those levels from just extrapolating the lines, the deviation levels up and down, and then splitting that up into 4 sections. So let's see if my slideshow still works. It does. Good. Okay. So yeah, I mean, I basically went from this up here and this. I mean, I literally had trading charts that looked somewhat like this. I'm not gonna lie. I bet you a lot of us have. There we go. Nice. Okay, so now it's gonna let me present again. Something happened with my internet here. There you go. Okay, yeah, we're in no rush. So I wanted something as simple as a 5th grader could understand. Like I literally want something that a 5th grader could trade and then enter its automation. The system itself isn't really that complicated. We're gonna go over it. Go over a few longs, a couple shorts. But to take away that manual aspect of it, I mean, I got a 9-year-old daughter. I could literally set it up, enable the strategy, and tell her just to watch things. And if something goes askew, to close a trade because maybe we didn't get an order filled or something like that. But she'd be able to do it. And she's not even in 5th grade. She's in 4th grade. So that's where the automation comes in, really. Yeah, so the geological record is solid as a rock, as we can see in simple patterns in nature. I mean, they say that there's no straight lines in nature. I mean, that's kind of straight lines. These look like our deviation levels, just the way that sediment piles up and erodes to expose that over time. And I basically think of the opening range levels as a set of stairs to follow for the whole trading day. There's going to be lots of orders placed on those particular levels. So you got to pick something, right? You got to pick something. And to have it be completely quant and non-discretionary to pick those levels, that's the only way. That's the only way that I can do things. I was never going to be happy with my own personal trading until it was fully non-discretionary. I mean, yeah, with this system, I might move a stop to break even or something, or it might be done a little early, but I'll never move a stop farther away from its initial target. Absolutely not. Can whoever has their mic unmuted, can you mute that? It's a little distracting. It might be Eamon. Can you just mute yourself, please? So yeah, this is my personal psyche mentor, Mark Douglas. Hopefully everybody has read Trading in the Zone at least one time. I cannot recommend it enough. This is one of my favorite quotes. Kind of pretty much have it memorized, really. There's a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or a numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. Now, good luck getting your psyche completely in line with that and doing it perfectly and letting go of all attachments for every trade. That's an ongoing process that me personally, I will never master. I'm that feeling kind of person where like I feel every tick. I wish I didn't, but I'm trying to accept every single tick in each direction. And one way that I can accept that is to walk the heck away from the screen. I never have to look for my entries anymore. I never have to wonder if I should move my stop a little bit farther away. That's just, it's never going to happen. But mainly the entries, just getting the entries automated is extremely significant. And I'm going to go through these 5 fundamental truths, and then we're going to go through the principles of consistency, and then I will show a trading chart. So also from Mark Douglas, anything can happen. Number 1, 5 fundamental truths. Anything can happen. Number 2, you don't need to know what is going to happen next to make money. So like part of me wants to rush through this part. Like people are probably getting bored. I don't know. I probably should show them some charts. Like this one I'm showing right here for me, these 5 fundamental truths and these 7 principles of consistency are as important or more important than the strategy itself. So I'm going to take my time and I'm going to read these. Number 3, there is a random distribution between wins and losses for any given set of variables that define an edge. And what do we have here with ORS? We have a legit edge. I make all my back tests 90 days. So we have a really nice control. There's no like, oh, maybe I'll just back test 30 days because that will make it look better. Or I'll do 222 days because that'll make it look great. It's always 90 days. So today we're going to look back 90 days. Last week, we would look back 90 days. 2 months ago, we would look back 90 days. It's always 90 days. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. It's all about probabilities. Number 5, every moment in the market is unique. And number 5, just like it's stuck in my head and running. Like one thing that the automation has helped me with and probably helped all of you folks that are just going to make a wild guess that are subscribers that are using our automation is I don't hesitate to get into a trade anymore. There's no hesitating. ORS, you're just going to get in it. I don't really have a choice about that. I mean, I could cancel the order and, I have done that if I'm not feeling well or whatever, but just to not have that hesitation. Like we have a saying in paragliding, it's my favorite sport besides skiing, that when you're running off the cliff with your wing inflated and you're about to start flying, there's a saying that hesitation kills the paraglider pilot. So if you get to the edge of that cliff and you hesitate for a second, your wing falls. So your wing's here. You hesitate, you stop your body moving, your wing's going to keep moving forward. Then your wing's in front of you, and then it's pulling you off the cliff, and then you're gift wrapped, and you're most likely falling to death or paraplegic or something on your way to the hospital. 7 principles of consistency. Who's that? Who's got their mic on? Can somebody mute that, please? Nice. We got a couple people here. Nice. Sweet. Okay. 7 principles of consistency. Number 1, I objectively identify my edge. 100%. I just can barely do that without automation. I can't do it without ORS. It's super hard. I mean, for a 3-hour trading session to objectively identify my edge in a quantitative manner for 3 hours, even 2 hours, like I end up breaking. It's maybe not that day, but it's later in the week. I mean, we have some of our subscribers that have just, I can see their journey. You've come such a long way, and I'm so stoked for you. And you know who you are. It's I guess you could call it I don't want to use the word hobby, but I have this other line of engagement with the world, we'll say, as a martial arts instructor. I got my black belt in Hapkido, and back in Santa Barbara, where the dojo is, and I'm in Bali right now, I get to see the progression of all these kids from not just their physicality improving, but their psycho-emotional faculties just going through the roof. I mean, I don't think there's a kid that I've seen in any of the classes that I've taught or been a part of that hasn't improved over time. And I feel like I get to do something kind of like that with ORS Fusion StratGeeks. And I'm really, really, really grateful for that. Number 4, we're going over that. I act on my edges without reservation or hesitation. Number 5, I pay myself as the market makes money available to me. I'm not going to sit there and extend my targets all day. Maybe every once in a while I might go for a little bit bigger win, but you gotta get out when the strategy says to get out most of the time. Number 6, I continually monitor my susceptibility for making errors. Number 6 is almost completely gone now, unless I'm really sick and I have a headache and I can't see straight like freaking last night. I don't have to really monitor my susceptibility for making errors anymore because ORS is going to do most of the stuff for me. That was a big thing, the error making in a manual strategy. And finally, number 7, we're going to look at some charts. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. So yeah, I am a successful Apex trader with multiple payouts now, and I attribute that to God and ORS Fusion, straight up. So let's look at a chart. Unless I want to bore you with any, yeah, I don't want to bore you with any more of that. Okay, so what the heck am I talking about? Let's look at this day. This day's cool. This is yesterday. I'm going to start by deleting this. And let me get rid of the trades on there. This day's cool because we had one short and a few longs, but there's a loss on here. I want to show you what a loss looks like. Okay. Who's still mute? You gotta mute yourself. Somebody's not muted. It's okay though. I'll survive. Maybe I can mute. Can I mute? Let me see if I can mute you. I'm sorry, Eamon, I am muting you. Oh, no, it won't let me. Okay, it's not that big of a deal. All right, so let's actually start by... Now we can leave this on here. That's okay. You know what I think I should do? I'm going to brighten up the times down here for us real quick. I'm going to take my time with this part. No need to rush it. Text, let's make that light gray or something. Dark gray, there we go. There we go. Now we can see the times. Okay, so our opening range, we have 3 different templates. This is the main master template. Oh, that's cool. The HMA is actually not on there right now because I think I enabled it and didn't reset Ninja Script. So that's actually perfect. Okay, so here's 9:30. That's the New York Open. And anytime you're interacting with me in any capacity, it's always going to be, I'm always going to be speaking in Eastern Standard Time. So here's 9:30. So we can see that this is it's all about the high and the low. If the first 15 minutes, there's the high. And where is the low? The low is right here at 9:45. That candle closes right here. So we're on a 3-minute chart with the MNQ right now. So we're not gonna have a candle at 9:45, but we'll still take just into consideration the first 15 minutes. You can kind of think of it as the first 15-minute bar, actually. So there's your low, and there's your high. So the idea is to figure out how much distance there is between this high and the low. That's the first thing we're gonna do, or we'll just measure from the high to the low. And this is actually, see this green light down here? It means it's a green light. We're allowed to trade this day at 239 ticks. I just didn't measure this perfectly, but there. Oh, let's see if I can get 239 here. Whatever, you get the point. So that's 240 ticks from the high to the low. I got cats running around on my roof. There's the high to the low. This time span right here is what dictates the whole rest of the day's trades. Here, hold on one second. Maybe if I message him, it'll mute. I just don't want this unmuted thing to get out of hand. Can you please mute? Thank you. Okay. All right. So now let's take that fancy fib tool. And yeah, send me an email at the end of this. I'll show you my email address and everything. If you want to just have this fib tool that I'm about to show you, I'll send it to you. You're not gonna be able to take the exact trades that we're taking because you're not gonna have the our proprietary ORS by cell zone indicator, which is what creates these shaded zones in the background. But you can still look for yourself about how effective these levels are. So we'll take our fib tool, draw it from the top to the bottom, high to the low. And this particular template splits up our opening range into 4 sections. Right about there. Now what we want to do is we want to measure what one deviation level is. Oops, I grabbed the wrong tool. Let's bring that out to here. There we go. So one deviation today, one range level distance. I call them SDs. They're not standard deviations, but I still like the term. Was called out on that, and I don't know. Some part of me, I tried to convince ChatGPT that they are standard deviations, and ChatGPT wasn't having it. That's okay. So I still call them SDs though, or range levels, RLs. It just doesn't have the ring of SD. So one SD today is 59 ticks. Now with this particular template, the target is 2 SDs, and the stop is also 2 SDs. So if we entered a short here, which is where we entered one. That will be our target down there. And sorry, that would be our stop down there for short. And then our target would be right up here at 200%. About 122 ticks. So 2 of these levels combined is about 120 something ticks or whatever. Okay. So if we look at, we'll just go into the strategy real quick and I'll show you what that looks like. We've got a lot of settings, and you guys and girls, you sign up, you get the best of the best settings. Eamon and I don't hoard the best settings and like, oh yeah, we got the best ones for ourselves. Let's give the second best ones to everybody else. That's definitely not what we do. I mean, honestly, there are no better settings I've come up with than this. Like, this is what I'm trading. This is what everybody trying. We're all in it together. So right here under exit settings, our stop loss SD value is 200%. So that's 2 deviation levels. And our target is 201%. Basically just because I wanted to call it a positive risk reward. And that 1% takes care of a little bit of commissions. So it's helpful. Okay, so now let's go in and deactivate the strategy. I actually have to activate to deactivate. Okay. All right, let's activate it again. And we'll be able to see the trades for yesterday on the chart. There we go. This indicator down here is the ADX. And if you've watched any of the older videos, we actually don't really need to use this anymore. So I just squeeze it down. I'm going to leave it on. I'm not going to have it taken off the strategy because what if someday we do feel like using it again? But we don't need to see that for now. Let's clean this up a little here. Oh, that wouldn't have been a trade here because we're not allowed to. So we're not actually allowed to start trading. The times are very, very particular based on our backtesting models. Extremely particular on when we're allowed to trade. Fix my shoe. When we're allowed to trade this system. So if I click Control E, then the trades will show up. So we started out yesterday with a loss. And right now, I think we're trading, this backtest model is 3 micros. So let's just zoom in on this trade. Is that really the best trade to show you? Yeah, that'll work. Just wondering because the HMA here changed mid candle on this one, but that's okay. So we basically need 3 factors to come into alignment to take a short or a long. So the first factor is this is an HMA. This is a 16-period whole moving average. So we need that to be blue. Why did this just disappear? Oh, I don't need to restart my Ninja Trader. I'll just reload NinjaScript if that happens again. Okay, so our HMA needs to be blue. And it is number 1. We need to have a candle closing below the HMA, and it does here. And we also need to be in one of these red shaded zones. It's a very light red, but it is red. I'll just color it even more red. So blue HMA for down sloping, a close below that blue HMA, number 2, and number 3 in a ORS sell zone. So this is our proprietary indicator. It's kind of our secret sauce. We got to have it. Got to have it. And so what's going to happen here in this red zone, in this sell zone, if you will. Let's just back up a little bit here so you don't have to see that yet. Okay, so as soon as this candle closes, we're going to get an order automatically placed right here, short on this line. And then we're going to look for this candle to retrace to that limit order. Limit short. And the beautiful thing, folks, is that limit orders actually work in backtesting. Market orders do not. They absolutely do not.
It's just a misnomer to even use market orders in any backtesting. As far as I've seen, all it does is give false hope. Then you go to trade it live and the results are not the same. So this sell zone is actually only to here. So from what we have seen live and backtest, so after we're done, and everybody that's a subscriber can absolutely corroborate this statement that I'm about to make. After every day, you can switch the strategy to backtest mode and look at the trades that backtest says occurred, and 95 to 99% of the time, they freaking match. Unheard of from any strategies that I've ever tried. So I won't trade anything else other than limit orders. So you got to wait for the price to pull back here. And then our profit target is going to be down here, 2 deviations away, or 200%. And our stop, sorry, my brain's not working at full capacity. This is going to be our stop. Oh, this is why this isn't a great trade to show you guys. Oh, because this one, no, it's okay. It's okay. Jeez, yeah, my brain's definitely not working. Definitely not working properly. Yeah, okay, our target, sorry about that. It's down here. Target, stop. So we got to wait for the price to fill, which it does here on this next candle. This is why I was confused, because it fills on the next candle, and that's what it's going to look like. It's going to look like it actually, this trade actually filled somewhere in the middle of this candle. That's why. And looks like we get about, let me make those wicks a little thicker for you guys. It might be kind of hard to see those wicks. Oh no, I got to get data series. Data series. And wick. And let's make those 5. There we go. So we can see we got, I don't know, 75% of the way to target, and it's not exactly outside the realm of possibility that I might go, oh, geez, that's 75% of the way to target. I might manually move my stop to break even there, but it certainly don't have to. You can make money with this system. Obviously, past performance is not indicative of future results. Disclaimer, 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 disclaimer. However, it can be a hands-off system. That doesn't mean that you can just let it go while you're sleeping. I wouldn't recommend that, because you might need to intervene if only 2 of the 3 contracts get filled. Nothing to do with ORS, or there could be a data connection loss via Apex or Rhythmic or something. So we can see that it does not hit target. And on this next candle, it stops us out right here. Okay, so let's look at the next trade. So now we can see that the HMA has turned white. Let's get rid of all these things. I'll show you long. Actually, we'll just move it so I don't have to write everything again. Okay, so now we're looking at an HMA that is currently white. And we can see that we're in a green zone. So here's our white HMA. Here's our candle closing above the HMA right here. And we can see that we're in a buy zone. Just gonna make that a little bit more green. And I don't need to go through every single template here. That can, that'll be in the meeting, and there's other videos too. We're just going to go through the main template here. So here's our buy zone. So we got our 3 factors: white HMA, close above the HMA, and a green zone. So what happens right when this candle closes? ORS is going to place a buy limit right here. Oops, F12. Limit long. And we're going to wait for the price to pull back and fill that order right here like this. And our stop is going to be 2 deviations back. 1, 2. And our target is going to be 2 deviations up. So let's see what happens on the next candle. Okay, so this is actually a really good trade. So you see how we did not get filled here. So now what's going to happen is ORS is going to automatically look at the close of this candle now. And very quickly, should be hard to do on this one manually, very quickly going to move. Very quickly going to move. That's what I was hoping would happen. Now I can hear talking in the background. Hold on a second.
Or if you maybe format it in different Excel, but just remember the Excel will be for,
Excuse me. So we're going to do one of these webinars every 2 weeks. I can't mute Eamon. I just cannot do it. Okay. All right. I can hear myself now. All right. So this candle closes right here.
This is my question.
And it's going to be a real quick
Excel,
pullback.
I sent you the Excel already, right?
This is so annoying. I don't know why he's not muting. You can probably hear him too at the same time.
To be on the main page of the OCP. Have one box for to access that.
Please mute.
And as another document, that the other document would be also have a would be individual, but you will have access from the OCP.
Maybe I can text him.
I don't know if finally
We can't be having this. Whatever. Amen. There we go. Please mute. Let's see if that works. Well, I can't talk when he's talking because I have a feeling that you guys are going to be hearing both of us. There's no reason that you wouldn't. Okay, but don't worry. We're going to do another one of these in 2 weeks, and maybe that recording will be better. But like I said, this is our first attempt with. It's not an attempt. We're doing it. We're making it happen. So here's that sell window goes all the way to here. And this buy window goes all the way to here. Okay, I think we got it. Okay, Amy just muted. Okay, all right, there we go. No worries. Okay, so this candle closes and we got our limit order here. And bam, it fills right here a few minutes later. And our stop automatically gets moved up a level. So stop's going to be 2 levels back. And our target's going to be 2 levels up. Stop here. Like that's pretty much the strategy. Like that's all you got to know, really. So this level, this window, I call them windows. Windows goes to here, and we can see that the strategy is telling us that this one was a winner, and almost a target, and target profit long 3 micros. So there's a long, there's a short. There's plenty of other videos that you guys can look at if you're wondering more about the strategy. Trying to think if there's really anything I need to really say about the strategy. Does anybody have any questions on any new folks have any questions on the actual execution of these trades? It's really quite simple. So this window goes all the way to, when does it stop? Oh, this window keeps going. So this window keeps going to here. Yeah. I will take any questions right now if anybody has any questions about this strategy, but it doesn't look like anybody does. That was a pretty thorough explanation. One of the things to keep in mind, though, is if it doesn't fill, like here it didn't fill, right? Well, then if we're still in a buy zone, the order is going to get placed on the next level, and we're going to keep chasing it up until it either fills or turns into a sell zone, or the HMA turns blue again, and then it's going to automatically cancel that order. So let's look at how the rest of the day played out. This is a nice day here. So we had 1 loss. And I think we had 4 wins or something. Luckily, I was really sick last night and couldn't deal with staying up till 2 o'clock in the morning because it just was not happening. I slept from like 8 to 8 p.m. here to like 8:30 a.m., 12 hours. But if I would have traded, and a lot of us did, then you would have had 3. Oh, yeah. We just kept trading all night. All day. Would have had Is that it? Yeah. So we had a win, a win, a win here, and a win here. This is a long one. Sometimes they're long, sometimes they're extended duration, I should say, so we don't get confused with the longer term. Sometimes they're an extended duration of time, and sometimes they are fairly quick. Okay, so let's lock this here. And now I want to show you folks, before I actually show you the backtesting results on a 90-day period on this HMA template, an issue of time, I think I'm just going to show just this one template. I don't think I need to show all the templates. Plus, I need to take a nap before it's time to trade again tonight, which I think I'm maybe going to do. I'm feeling pretty good. Okay. Okay, so with ORS, we don't just think about the strategy itself and how to execute trades. We think about our risk management. It's a very, very, very important part of this strategy. A lot of strategies out there, you know, that I've bought, like they kind of touch on the risk management, but there isn't a definitive quantitative way to control your risk that is taught by the company or taught by the instructor, or I don't know. This is pretty unique. So each day, as a baseline, each day I'm only going to risk here. Let me get rid of all this stuff here. Let's lock this and let's get rid of all this extra stuff on here. Drawing tools and remove all drawing objects. Yes. Okay, so let's zoom back in on the beginning of the day here. I don't even want to see the trades right now. Let's get rid of those. Okay, so we know that so we can do it. I guess we can do it with one of the trades. Let's do it with this one. This one's pretty easy to grasp. Can actually do right here. Okay, so there's, just reiterate, here's our first 15 minutes of price action, which dictates our range levels. A stop is 2 deviations away. And a target is 2 deviations away, with this template being a 1-to-1 risk-reward ratio. Now, how much are we going to risk per day? Well, my control measure, if you will, my control unit for teaching, and mainly because I have mostly Apex 50K accounts, is an Apex 50K account. And with that account, you're allowed a $2,500 drawdown before blow up. So I feel like a 200, this is a feel thing. I mean, it's been working pretty darn well. I think 200 is reasonable. I mean, 200 seems reasonable. 5-10% of an Apex account. Like, yeah, dude, I'm going to risk that. I mean, 10% is 100 or 250. So $2,500 drawdown allowed times 0.5. Oops. No, times 0.5. So yeah, it's between, hold on. 500 times 0.05 rather is 125. So that's not quite enough. 5% and 10% might be a little bit too much. So we're right in the middle at like 6, 7, 8% risking of our full drawdown capacity allowed with an Apex 50K account. So I chose $200 as our control unit risk per trade. So what's up with that? How do we deal with that? So we can see here our opening range is 239 ticks from the high to the low right here. We're going to call that 239. I'm probably not going to get it perfect. Oh, I got it. So 239 ticks. Let's get the calculator out. Where'd it go? We know that here we go. We know that our target, we're gonna go with a target smoothing on this one. Our target or our risk, it's the same thing. So we know we can take 239 ticks total divided by, now there's a quicker way to do this math, but for illustration purposes, I'm going to do it this way. Divided by 1, 2, 3, 4 sections. So each deviation is 59 ticks, but we're going for 2 deviations. So times 2. You could divide it by 2, but we're going to the long way around. 119 ticks. So each one of these targets is 119 ticks or so. Okay, just pretend that says 119 because I'm getting tired and I don't feel like tweaking that ruler. So 119 ticks. Well, how much is a micro contract worth on the MNQ? Well, everybody knows it's 50 cents. 50 cents equals. So that means each trade with 1 micro contract on this particular day, every day is going to be a little bit different. On this particular day, our starting unit of 1 micro per target, or in this case, per stop, 1-to-1 risk reward, is a 59, we'll call it $60. So $60. And say you want to get close to 200, right? So 200, and there's actually a member that posted an Excel sheet. Maybe he can post it again. Well, maybe I can include it in our welcome letter. That might help people out. So 200 is what we're trying to go for, a $200 risk per trade. And it's $60 per micro. So we can divide that by $60. And we can see that if we wanted to get exactly $200, which we can't do in this case, 3.33 contracts. So if we did 3 times 60, it'd be 180, or you can choose 4 contracts times 60 and go a little higher than 180. So it's up to you to choose 180 or 240. Every once in a while, you'll get it really close to 200, but it's usually going to be somewhere between 175 and 250. It's pretty rare that it goes over 250. If it's over 250, I just might not trade that day. We have a max opening range allowance on this particular template of 550 ticks. That's what I have mine updated to. I think a lot of you folks are probably still using 700. I don't know. I changed mine to 550. So if everybody wants to do that, that's fine, but it's not that big of a deal. So 550 is what my template is now. And I've posted that as well. But it's honestly pretty rare that something comes up that's more than 550, especially now, but it can happen. There was a week there where, was it that Black Monday, where the opening range on like most of those days was like over 700, and we survived that week, I'm proud to say. So that would mean, our opening range is something like over this. That's a big day. That is a big day. And then, you're only gonna be able to risk so much as a minimum on a day like that. Okay. So that's how we deal with our risk. And right here, if we go into strategies, we can see where we put that. So I wanted to risk, say 240. So say I have full drawdown left on a 250K account. Maybe I want to go for it, 240 a trade. So we can deselect enable, click apply, and we can come right here, position size. This is the most important part of the whole strategy as far as risk is concerned. So position size. So if you wanted to trade 4 micros, then you would simply delete that and put a 4 in there and click enable, deselect backtest, and then click apply, and you'd be good to go. So I do want to show you some back testing with this model. So I think 3 is a good average as far as the MNQ is concerned on this 3-minute chart. So we'll do 3 and okay. And you don't have to, we call this risk smoothing or target smoothing. I still haven't decided if risk or target smoothing is better. Should probably be called risk smoothing, honestly. So let's go to right click and strategy performance. So you don't have to use the risk smoothing. You could just let it trade 3 micros every single day untouched if you wanted to do that. It's not a problem. So real time and historical. So with 3 micros in 90 days, you have a $14,655 profit potential with a drawdown of 1,458. And that larger drawdown probably came on this larger day here. So see this, there was one day in particular where each trade probably at close to like a 400 and it's probably close to a 500, 525 tick opening range. something like that. I'm not going to do the math right now, but this is a larger day. But what we do with the risk smoothing is we smooth that risk profile out over the whole course of our 90-day back tests and our forward trading. So we're never going to have a day with risk smoothing implemented. We're never going to have a day where our largest winning trade is $389. It's just not going to happen. So, yeah. So we got a 61.26% profitable. And, like for some of the templates or the FOMC only template, the win percentage isn't as important because on that template, we have a 4-to-1 reward versus risk profile on that one. But this one's a 1-to-1. So 61.26. I've seen it in 90-day back tests get up to 63%, maybe closer to 64, but 61 is not bad on a risk reward that's 1-to-1. So why I'm choosing 3 micros right now is I want to get this average, just for backtesting purposes, I want to get this average winning trade to about $200. So if I make this 2 contracts, I did it previously, it was like 140. Well, that's not enough. If I do 4, then I think it's like, well, I'll just show you one example actually. So if we do strategies and we go in and we make this 2, and calculate and right click performance. If we make this 2, then our average winning trade is only 144. If we come in and we make this 4, let's do it. I've already made you guys sit here long enough. I might as well just make you sit here even longer. If I can do it, you can do it. So let's try 4. And our drawdown is going to increase as well. And so is our profit. You don't have to use the risk smoothing. I highly recommend it. It makes it a lot less emotionally taxing for me to know that every single trade is going to be risking about $200 throughout the whole day. There's no like, oh, now the ATR is huge compared to what it was earlier. I better reduce my risk to 2 contracts before it was at 5, and I better reduce to 2, maybe even 1 contract. And then you got to disable and then adjust and then re-enable it. No, we just know that the whole day is going to be about $200. It's a really important part of the strategy. So here now with 4, we can see our average running trade. That's too much, 289, 290 if we're looking for 200. So, but we can see that our profits did increase, but so did our drawdown. And I actually don't like that drawdown either. So we'll just go back to the 3, and I'm going to show you some quick math on. Oops, what am I doing? So there's these, I might as well talk about it while I'm here. So we actually have settings for the London Open. And for Eastern Standard Time, the London Open is 3 a.m. and we start trading at 4 a.m. Eastern Standard Time. So for me, that's a great template. That's 4 a.m. or 4 p.m. for me over here in Bali. So if you're in Asia or if you're in Europe, this template's freaking great, man. And then we also have, so just these 3 are the only ones that we use, this 1.1 ones, this FOMC and day before holidays only. And yeah, we're still trading the Fridays, of course. So that one's only to be used if it's an FOMC red event. So either PAL talking and it's red, or some kind of FOMC statement or meeting minutes or something. And we'll use, oh yeah, this one, sorry. This one, not that one, the holidays only. And obviously you get all of 3 of those master templates when you sign up. And okay, so let's go back to position size of 3. Okay. And the market did just open. Yeah, I don't know. Hopefully we didn't lose anybody because the market opened, but whatever. It's going to get recorded, so just watch the recording. It's all good. Okay, so let's get this screen. I want to show you how the risk smoothing pans out for our math. And then we're going to be done. Okay, so right click, strategy performance, real time and historical. And now we got that reasonable about $200 in there. Now let me go ahead and pull up this little dealio here. So I'm going to show you some estimates on what the profits and possible losses would be Let's just get this all the way down here so it's not distracting. And maybe we can zoom in on that. Oh, there we go. It looks good. And we don't really even need to do this part of it anymore. So, okay. So we have a total of 302 trades. So we can put that in, we can plug that in right here. 302. This was the last 90-day period, by the way. So, you know, there's going to be a week that's flat. There's going to be, you know, not every week's going to be massive, you know. And actually, while we're talking about it, why don't I just show you the weeks here before I even get into that, so I don't forget. Okay, analysis. So there we have our full 90-day, very accurate. Oh my God, backtesting that's accurate. What a concept. So we can see we did, you know, we've been kind of in a flat period since the 17th here. You know, we had this peak here, then we went down, then we went back up to that peak, then we went down, and then that's cool. Looks like we're maybe, looks like a new high, 14,655. 14,529. Yeah, so we got a new high. So hopefully we'll start making some new highs in the drawdown. But look at the weeks. You know, not every week. Don't be scared if we don't get a week that's like massive profitable. So let's look at that. I feel like this would be interesting for a lot of people on YouTube. So weekly. There's about a week. You know, right here we had a flat period as well from the 27th to the 20. Oh, week 27 to week 28. And let's pull up the bar. So, you know, we did have a flat, somewhat of a loss week this week for $128. And that's going to be fairly accurate since we're doing the risk smoothing. It's not going to be more than 300. And then this week we lost 255. So I highly doubt that's going to be more than 350. You know, that we did have one giant week. You know, this would be a case to be made for like, don't touch the bot, you know. But I like these average weeks here, and this is the current last 2 weeks. So we're on looks like we're on the lookout for another good week, some more weeks that are great coming up here, folks. So that's pretty cool. Let's look at the trades. And this is a 1-to-1 risk reward ratio. So we can see that there is clearly, you got to be ready to take losses with this. It's a 1-to-1 risk reward ratio. It's a 62% win rate. So I'm not trying to blow smoke and say that you're never going to take losses with this strategy. And I think a lot of people appreciate that. Personally, I do. Like, oh, it's the best. You're never going to lose money. It's so perfect. And like, yeah, to me, perfect is a strategy that actually backtests like it forward trades. And that's what we have here. So we have clearly more green trades than red trades. So with the risk smoothing profile, you would see something more like, here's about 210 right here. You would see a bunch of $200 trades right along this line, and you'd see a bunch of $200 trades right along this line. And just that visual alone, it's pretty cool. Okay, so let's go back to the analysis page, or the summary rather. And let's make that smaller. Let's make this smaller again. Okay, so we had total wins of 185. So let's plug that in right here. And again, this is an estimate, and backtests are estimates, 185. And we have losses of 117. 117. And we'll get the calculator out. We'll do this math. And then we'll delete that. And we'll delete that. And that can go away. So this 90-day period, it's not quite as profitable as the other 90-day period that I made this template or this sheet, I don't know, 3 weeks ago or something, but it's still great, man. I mean, come on, almost 15 grand. That's incredible. 14, 6, 15, 16, 17. So 3 grand less. I mean, that's like $1,000. It's $1,000 less per month over the last calendar day period, but we always got to keep it at 90 days. Always got to keep it at 90 days. So let's get the calculator and just do some real quick, simple math here. And like I said, I've never seen another strategy that implements something, you know, arguably so freaking simple. So winning trades, 185 minus the losing trades, 117 equals 68 net wins. I don't know why that got deleted somehow. $68 net. Oops. 68 net wins. So what we'll do here is we will take 185 times 201. Obviously, this is an estimate. So 37,185. 37,185 minus the losses. This is $200 from the profit targets are 1-to-1, obviously. So 117 times 200. 23,400. 23,400. Okay, so take 23,400 and we can just do it this way. It'd be fine. 3,7,185. So it's a total profit of 13,785. Obviously, I mean, let me do it this way too. 185 minus 23,400, 13,785. And then the total estimated commissions, we're actually just going to use this number over here. Commissions 1,105, because it'll be pretty darn close. We definitely want to make sure we include the commissions. So we can just put that right here. So 302. I don't even need to put that over there anymore. When I first designed this, I didn't realize how awesome it was just to be able to smooth that risk there based on the average winning and loser. So our average commissions are 1,105, 1,105, and we will take that 1,105. So minus 1,105 equals 12,680. 12,680, not touched at all. And let's see, divided by the 3-month period is 42.26. So you could, in theory, have qualified an account and almost gotten a payout in. You're definitely I mean, with these numbers, obviously, you're definitely qualifying or getting a payout within the month, non-touched with this historical data, of course. Disclaimer, disclaimer, disclaimer. 4226. And your estimated drawdown. So it looks like we still only have 5. The estimated drawdown could get a little bit more than what I'm about to plot in here, but it's pretty doubtful. And it's a good estimate anyway. I mean, you could even look at this. You could say 1458, or, you could use the 5 max losses in a row, 5 times 200 and call it $1,000 drawdown. So that's pretty freaking awesome. I think maybe on the next webinar, I'll go over so I'll just show you these numbers real quick, but we can go over them. So on the days that we're not, this is going to be slightly different because we're going to do a new 90-day period. I just don't have the energy to go through everything like this again for this other template, but this is a template we use only on FOMC and PAL days. This one's split up into 6 sections. It's got a way smaller moving average. I think it's like a 7. So there's definitely some differences. The risk reward model is 4-to-1. Or 1-to-4, I guess. You're going for 4 deviations, risking half of it. So no, you're going for 2 deviations and you're risking half of 1. So it's 4-to-1. And so this, you could hypothetically add this to this. So 12,680 plus, call it 10,000. So that's 22,000 or something. And then we have the London session as well. So the London session, last time I ran it was like this. And I ran it again the other day. Nothing's changing that much. Just to get the basic idea. But I'll go through these more in the next webinar. And yeah, maybe we'll take these webinars and we'll put it as a playlist on the channel. And I won't go through as much history or story the next time. But I think people do need to know. They need to know at least the whole trading method. That's for sure. So the 90-day London session, also the 3-minute chart. And that's from 4 a.m. to 8 a.m. Eastern Standard Time. So the gross profits here, so the net profits was about $10,000. So you could, in theory, add that 10 to this 10, call it, that's 20. Plus, I don't know, even just call that 10. So you could, in theory, make 30,000 untouched, trading every single trade divided by 3 or $10,000 a month with 1 cash account or 1 Apex account. Well, like I don't have just one Apex account. I got a lot of Apex accounts. Say 5 Apex accounts, not touched, 50,000 a month. I mean, you even want to see? Do you even want to see? I mean, 30,000 is going to be, it's kind of ridiculous, you know, but we should all try to get ourselves to that higher level, resonate with the high frequency, you know, as the Californian would say, times 10 Apex accounts. I'm telling you, I definitely have 10 Apex accounts. So that's $300,000 a month if I can ever figure out how to take every single trade, no matter what, and not touch, which that's my goal. I eventually someday want to be able to take every single trade. It's really tough for me right now, especially the New York session, because it starts at 10:30 p.m. my time. Then I got the custody of my daughter, and I got to put her to bed at like 9:30, and then I got to like take a nap and then wake back up at 10:30, and then I'm supposed to trade till like 2:30 in the morning, and then I just repeat. I don't know. But yeah, it's flexible. So there's something for everybody here. Either the New York session will work for you, or the London session will hopefully work for you. So let me just go to our website here, and I'll give you my email address. And if you want that fib tool, send me an email. Now, again, you're not gonna be able to take the exact same trades because we're not gonna just, we got to give some kind of barrier for entry here. Otherwise, we'd have like a ridiculously massive amount of traders, and it's not really what we want. We want to have like Eamon was saying, we want to have a tight knit family of traders where we can all help each other out. And there's a lot of stuff that we share on the Discord. We always seem to have each other's backs. It's a very supportive environment. I've heard it said that the most supportive environment that some of you guys have ever been in. So I'm really happy to report that. Let me see if there's any chat messages. Okay, nice. Okay, and with that, let me just get back to, so that's about an hour and 20 minutes. I didn't expect it to go after. No, not that. I need, oh, it's still this screen. And let's maximize that. Yeah, speaking of, like, this is you in the driver's seat, and you got Eamon and I helping you out. You also got the other traders in the Discord that are, if I'm not awake and I'm sleeping, because that's maybe what I do sometimes at 1 o'clock in the morning for the New York session, almost always somebody will get back to you with an answer to your question if you're new. Pretty awesome. Thank you, everybody, for that. So yeah, we'll give you the software, setup, the best of the best templates, also the training, so you don't have to be worried like, oh, did I set it up right? I don't know. Then we'll give you a discount, 50% off the first month. And I believe that's still, so yeah, we'll give you an automated trading future based on the tried and true opening range. And I can say right now, it's tried and true for me and for Eamon and for a lot of us who've been here making comments. What? How do I not have the one slide? Why is my last slide not here? Oh my God. It's the slide with my email. Why is that not there? What the heck? Maybe I deleted it by accident. All right, whatever. I'm gonna just write it in. So my email, 1traderjake@gmail.com. Whoa, my internet connection is being crazy. You should just flip the whole thing upside down. And then I am Jake. So for Discord, join our Discord. Just go to our website. And our website here, let me show you our website. Where is it? It's I think it's here. So if we minimize this screen here, okay, let's do this. There she is. Eamon rebooted the website. Didn't even realize what he was doing. That looks great. Thanks, Eamon. So here you can see a lot of stuff, and here's a little bit more concise 45-minute webinar. It explains basically the same stuff. But if you go to pricing and subscription, you can see that we do sell additional licenses, but this is the only one that you really need at first. And the additional license is not actually that price. We'll work out a special price for you if you want a second license for sure. It would be substantially less than that. So you would just go here. Highly, highly worth the investment. Sign up now. And then right here is where you put the discount code in. enter your code, and that discount code is very simply webinar 50. Apply. Coupon code successfully applied. So you get to try ORS for a whole month for only $300. And you really need to do it for a whole month. You got to get the feel of everything. And let me see if I can actually answer your question. Yeah, Jimmy, do you have a question? You want to type it in the chat? And then see what else. Where is my chat? I know I have it on there. Denise, Jimmy. I see your hand is raised, Jimmy, but I don't see anything in the chat. Oh, maybe. No, nothing in the chat. So I don't know if you want to just type it in the chat there. The chat's kind of right next to, it's like in the menu bar. Anyway, so yeah, I think we are good to go here. Let me just type out the webinar 50 again for us here. Discount code web, all lowercase, webinar 50. So that's for 50% off the first month. All right, with that, yeah, Jimmy, just send me a message on Discord. We can catch up that way. Let me just check the chat one more time, see if you did. No, okay. All right, well, I appreciate everybody. And yeah, we'll be doing another webinar just like this in 2 weeks. And let's see, when would that be? That would be on the 9th of October. So we'll see y'all on the 9th of October. Jake from StratGeeks signing out. At least I think I can sign out. I don't know if Eamon's got to do it. We'll see what happens. Again, this is our first webinar on Zoom, so we'll see how it goes. And yes, oh, I actually see Jimmy's question now. Yes, $200 per trade. Yes. Yes. 200 per trade with a 50K account. Now, if you got a 150K account, you could probably do 400, you know? It's all about your account size, but the control unit is, for me, is $200 risk per trade for a, let's see, let's check it. Let's check out the live screen actually real quick before we go. Almost so you guys can see how it's forming, because I don't know where Eamon is. I think he's got to be shutting down the menu or the meeting rather. Let's share it again. I just want to show you like live what's happening now. Yeah, let's do it. So let's go here. Let's clear all drawing tools. That'd be kind of cool to see live. Drawing tools. Oh, I have it locked. And I will delete you. There we go. Yeah, we'll get a little more precise with the next meeting. I mean, I say that, but it's probably not. I can yap for a while. I mean, I'll keep you all here for another 2 hours. Let's go. Maybe not. No open questions. Okay. All right. So what's going on here? So you can see here live, you don't need that fib tool, right? So we can go to strategies and we'll turn it off. Always deselect backtest when trading live. Deselect, enable again, choose your account up here. And the onboard training meeting is like an hour long. I'm pretty detailed about it. And again, like I'm going to help make sure that you're all set up perfectly anyway in a Zoom meeting, one-on-one screen share. I'll even take your mouse control if I need to, and just be able to point and do stuff literally for you. So we can see here, 956. So we can see our opening range here. Today we are allowed to trade 270. That's a nice opening range. 270. And we can measure that here. 270. Of course, I'm not exactly accurate with it. And at 10:30, this red shade will disappear and we'll just go to the gray background with the buy sell zones and we'll start trading. So if this was a green zone here, then we would have, oh man, I don't know why my HMA keeps, see, I also highly recommend, let me just show, for people who haven't seen me do this, let me just show you what I do every day before, or one of the things. I right click down here on this is my VPS, and I go to adjust date time. I click sync now. Get rid of that. Then I use Apex Desktop Assistant to clear my cache. I can't really, it's not really, I'm really gonna be able to show that, but I also reset my computer and then I load up my particular template for that day. So like, I don't know why the HMA disappeared, but it doesn't usually do that because I do all the resets every day. There we go. All right, I'm gonna stop yapping. Hope you all have a great trading day, and we'll talk to you next time.